At the start of 2025, no one could have imagined that Tesla, one of the world's most successful companies and a trailblazer in electric vehicles, would be plunged into the most severe crisis in its history within just a few months. Its stock nosedived by 53%, and its sales in Europe dropped a staggering 70%. So, what exactly happened? What does this massive collapse look like, and what's behind it? Some in Europe point to the new Model Y Juniper as a potential game changer, but it's already been on the market there for over a month, and so far, the expected rebound hasn't materialized. Sure, it might still make an impact as more data from April through June rolls in, but right now, things aren't looking great. Take Norway, for example, a country full of savvy EV buyers where Tesla has long had a strong presence. It's a relatively small market, but nearly all new cars sold there are electric, and Tesla had a devoted following. Still, even there, sales are down by about 11%, which doesn't inspire much confidence. What's become clear is that Tesla isn't just battling market forces, it's caught in a much bigger geopolitical storm. The company's future now hinges not only on its cars or consumer demand, but also on the decisions of one man, Elon Musk. And his bold ventures have run headlong into serious obstacles, particularly from Donald Trump's aggressive trade policies and tariffs. Those tariffs, designed to protect US manufacturing, have backfired badly for Tesla, which relies heavily on global supply chains and affordable imported components. After Europe hit back with its own tariffs, Tesla's sales in key countries like Germany and France took a brutal hit. For the average buyer, Tesla's already expensive cars became even more out of reach, and that spelled disaster. What's even more troubling is that while Tesla saw its EV sales in Europe fall by 45% in January alone, the broader European EV market actually grew by 37%. That means Tesla isn't just struggling, its rivals are thriving. So why have European consumers, once loyal Tesla fans, begun to abandon the brand in droves? It's not just about price. Tesla's image in Europe has become increasingly toxic, thanks to ongoing political controversies and Musk's outspoken behavior. The company has taken heavy fire, not just from European critics, but also from voices back home in the US. And all this negativity is starting to have a real impact. Even politicians have weighed in, some supportive, others not so much. Trump's 25% tariffs on aluminum and steel imports led to a fierce response from the EU, which retaliated with tariffs on $28 billion worth of American goods. That tit-for-tat trade war has created chaos, and Tesla is one of the biggest casualties. The protests across Europe have also grown louder, with many consumers turning to local alternatives like Volkswagen or international competitors like BYD. Tesla, once seen as the cool, cutting-edge choice, is now viewed by many as overpriced and politically charged. All of this raises a serious question. Is Tesla's reign in the EV world coming to an end? We're only at the beginning of this story. The coming months will determine whether Tesla can recover, adapt, and win back the trust of global consumers, or if this marks the decline of one of America's most iconic innovators. The outcome won't just shape Tesla's future, it could ripple through the entire global auto industry. So what caused this steep downfall? Could Tesla bounce back, or has it lost too much ground? Stay tuned as we unpack what happened to one of the brightest symbols of American innovation, and whether it can survive in a world where politics and economics now hold the keys to success. At the start of 2025, things took a sharp turn for the worse for Tesla. What unfolded over just 3 months was nothing short of a nightmare. Even the most pessimistic analysts couldn't have predicted the scale of the collapse. Back in January, Tesla's market value was nearing $770 billion. But by March, it had plummeted to just $360 billion. A shocking crash that sent ripples through the financial world. But even more concerning than the stock plunge was Tesla's fall from grace in Europe, once considered a key stronghold. Sales across the continent dropped by an astonishing 70%. This dramatic shift wasn't just about cars, it was political. Europe hit back hard in response to former President Donald Trump's trade policies. His administration had imposed new tariffs on goods from China, Europe, and Canada, without fully accounting for the consequences. Tesla, a company built on global supply chains and reliant on affordable imported components, suddenly found itself in the crossfire of a full-blown trade war. Trump's tariffs sparked a tit-for-tat retaliation. Canada, America's largest steel supplier, responded with tariffs on $20 billion worth of US goods. The European Union followed suit, targeting $28 billion of American exports, including iconic brands like Harley-Davidson motorcycles and Kentucky bourbon. In the heat of this feud, Tesla was left exposed. As materials like lithium, cobalt, and nickel, key components in EV batteries, became more expensive, Tesla had no choice but to raise its prices. That was the first blow. Then came the sales numbers. In the first quarter of 2025, Tesla delivered just over 336,000 vehicles, far below analysts' expectations of around 350,000 to 360,000. For context, this was Tesla's weakest quarter in terms of deliveries since early 2022. European consumers, once eager to embrace Tesla's innovation, began to turn away. Around 60% of previous Tesla buyers in Europe now say they don't plan to buy from the brand again, citing the rising prices and the growing political baggage surrounding Elon Musk. Musk's public support for Trump and his trade decisions only fanned the flames. In countries like Germany, France, and Italy, Tesla's image suffered. Prices jumped, and the brand lost its luster. Once seen as a symbol of futuristic mobility, Tesla began to represent something very different: political controversy and economic instability. As a result, buyers started seeking alternatives. Chinese EV makers like BYD and NIO, offering comparable features at more competitive prices, gained serious traction. Meanwhile, European automakers like Volkswagen, Renault, and Peugeot ramped up their electric offerings, cut prices, and expanded production, drawing even more customers away from Tesla. In Germany, where Tesla once stood as a beacon of cutting-edge tech, sales dropped a staggering 73%. In France, the decline was 66%, and in Italy, it hit 70%. These weren't just numbers. They reflected a broader shift in public perception. Europeans no longer saw Tesla as a dream car from Silicon Valley. Instead, it became a casualty of a global power struggle, pulled into a political and economic conflict that consumers didn't want to be part of. Adding to the pressure, US public opinion was also shifting. Polls showed 56% of Americans disapproved of Trump's handling of the economy, and dissatisfaction with his tariff policies was even higher. In the end, the most unsettling part of Tesla's decline wasn't just the shrinking sales or crashing stock price. It was the sense that the brand itself, once untouchable, was being abandoned. Tesla's identity as a revolutionary force in sustainable transport was fading, replaced by growing resentment, global tensions, and a changing competitive landscape. Is this the end of Tesla's dominance, or just a rough chapter in its story? That remains to be seen. What's the latest on the Cybertruck? You've got some inventory piling up there, right? That question echoes a broader concern within Tesla, because while attention once centered on futuristic products, the bigger story now is the company's rapid decline, especially in Europe. Back in 2022, Tesla was still dominating the European EV market. Its presence in countries like Germany, France, and the Netherlands was impossible to ignore. The company held nearly 40% of the electric vehicle market in those nations, steadily growing its sales and displacing traditional automakers. But everything began to shift in 2023. Elon Musk, once hailed as a visionary and symbol of progress, started drawing increasing criticism. His vocal support of Donald Trump and controversial political stances became a major liability. Even then, signs of public dissatisfaction were starting to appear. Small protests emerged in parts of Europe over Tesla's rising prices. But the true scale of the fallout wouldn't be clear until 2025. By then, the situation had turned into a full-blown crisis. The drop in sales wasn't just due to higher prices or political controversies. It reflected a deep public shift in how people viewed Tesla. According to the European Automobile Manufacturers Association, many consumers began voting with their wallets and deliberately avoiding the brand due to its association with Musk and Trump. In London, the backlash became particularly visual. An activist group called Everyone Hates Elon began hacking bus stop signs and replacing them with protest posters. One even parodied Tesla's 0 to 60 tagline, showing a picture of Musk with the caption 0 to 1939 in 3 seconds, a dark reference linking Musk's controversial hand gesture at Trump's inauguration to World War II. To imagery. Musk never clarified the meaning of the gesture, but the damage to his public image was already done. Sales across Europe began to nosedive. But this wasn't just about bad PR. It was the result of a perfect storm of factors. First, Trump's tariffs on foreign imports, strongly supported by Musk, stripped Tesla of its once clean image in Europe. The company started to be seen not just as an American innovator, but as an economic aggressor, one that played a major role in global disruptions to trade. Second, rising manufacturing costs drove up Tesla's car prices. Essential raw materials like lithium, cobalt, and nickel surged in price, and Tesla passed those increases on to consumers. The steep hike in base model prices pushed many potential buyers away. While Tesla floundered, its competitors saw opportunity. Volkswagen, long seen as a more conservative automaker, moved quickly. It aggressively promoted its electric ID.4 and ID.3 models, which were not only cheaper, but better suited to European needs. Renault and Peugeot also upped their game, expanding their EV offerings and enhancing their cars with more advanced tech. Meanwhile, Chinese manufacturers like BYD and NIO entered the European market with well-equipped, competitively priced EVs that turned heads and stole market share. The result? By March 2025, Tesla's European market share had fallen below 5%. That decline symbolized a dramatic reversal. The company that once represented the future of mobility had become a cautionary tale. Elon Musk, who had proudly boasted of Tesla's success, was now under fire for his controversial behavior and the chaos it caused, not only for the company, but for its investors. Amid all this, Musk still appeared on stage at events, smiling and celebrating, even as Tesla's stock had been cut in half. Critics saw it as callous, out of touch. What kind of person celebrates in the middle of a disaster? Some asked. What a joke, others said. Who dares to show joy when their company is burning? And burning it was, sometimes literally. In Italy, police began investigating a suspected arson attack after a fire destroyed more than a dozen Teslas at a dealership in Rome. Musk called the incident terrorism, pointing to growing global protests and backlash against his brand. Tesla's stock, already reeling from months of poor performance, had dropped 53% by March. Investors were stunned. And it wasn't just a temporary dip. This collapse marked a turning point. What had begun as a political gamble had spiraled into a financial nightmare. A company once seen as the crown jewel of innovation was now a lightning rod for criticism, caught at the center of a global storm involving trade wars, political extremism, and shifting consumer values. Investors began pulling out. Wall Street, which once viewed Tesla as an unstoppable force, now treated it like a cautionary tale. The European meltdown triggered a chain reaction that shook not only Tesla's future, but the broader auto industry and financial markets as well. What we're witnessing isn't just a business failure. It's the unraveling of a brand that once symbolized the promise of the future. The reasons behind Tesla's collapse didn't emerge overnight. It was a slow-moving disaster that built up over time. The first clear warning sign came from Europe, where sales dropped by a staggering 70%. This sent shockwaves through the market and shattered investor confidence almost instantly. At first, analysts scrambled to assess the damage, unsure whether this was a temporary dip or something far worse. But it didn't take long to realize, this wasn't just about Europe. Tesla's problems were global. The collapse in Germany, France, and Italy was especially shocking. These were countries where Tesla had long reigned supreme, dominating the EV market for years. The idea that Tesla could fall so quickly from its leading position was unthinkable. until it happened. Economists began calling it what it was. Not a blip, but a catastrophic failure of the company's broader strategy. Panic soon spread among retail investors, many of whom had invested their life savings into Tesla stock, believing in its long-term promise. As their portfolios began to crumble, they rushed to sell. And when individual investors started to exit, big players weren't far behind. Institutional investors, pension funds, major banks, and strategic investment firms followed suit, dumping their Tesla holdings. By March 2025, the writing was on the wall. Tesla was no longer the golden child of the stock market. Once seen as a blue-chip, rock-solid investment, the company was now being labeled a risky bet with a highly uncertain future. The panic intensified as prominent financial institutions started speaking out. Major banks began downgrading Tesla, labeling it a volatile asset. The company's reputation as a market leader was crumbling in real time. Tesla shares tumbled more than 9% in a single day as news of declining European sales spread. The electric vehicle maker had posted significant sales drops in 5 key European countries, including the UK and France. It was a steep fall that no one could ignore. CBS News foreign correspondent Remy Inocencio put it plainly. What we're seeing here is more than just weak sales. This is backlash. Musk's increasingly vocal support of Donald Trump and his political stances have sparked anger, frustration, and even disgust, especially in Europe. People are now taking that out on Tesla. The numbers were painful, a 45% drop in European sales in just 1 month. But it wasn't just sales. It was the public perception of Elon Musk that had shifted dramatically. Where Musk was once praised as an innovation icon, he had become the subject of widespread criticism. His increasingly provocative political comments, as well as those from his inner circle, made headlines for all the wrong reasons. What was once eccentric charisma now came across as arrogance and recklessness. Financial experts began to voice a hard truth. Elon Musk himself was becoming a liability. His erratic behavior wasn't just affecting the company's image, it was undermining investor trust. Many began questioning whether a CEO with such volatile public conduct was fit to lead a company of Tesla's size and importance. But instead of calming the situation, Musk escalated it. He doubled down on his political views, publicly backing Trump's controversial tariffs and lashing out at European leaders. Protests against Tesla erupted in Germany, France, and the UK. Activist campaigns targeting the company intensified. Headlines increasingly painted Musk not as a trailblazer, but as the symbol of an outdated and divisive era. Tesla had once represented innovation and bold ambition, but now it was being recast as the face of corporate arrogance and political interference. And that shift wasn't accidental. It was the result of a coordinated push by both Tesla's competitors and political activists who were determined to bring down the company's image. What made matters worse was that Tesla wasn't just a car company. It had become a cultural phenomenon. That meant its downfall had consequences far beyond the showroom floor. The media began referring to it as the end of the Musk era. And that narrative stuck. Meanwhile, financial markets were in freefall. Tesla's stock continued to slide amid growing skepticism around Musk's leadership, disappointing earnings forecasts, and mounting geopolitical tension. Financial analysts began aggressively slashing their projections. Major institutions like Morgan Stanley and the Royal Bank of Canada downgraded Tesla, dropping their buy ratings and significantly cutting their price targets. The impact was massive. Tesla's market value plunged by $400 billion in just a matter of weeks. This wasn't just a financial crisis, it was a full-scale reckoning. Musk, once seen as the embodiment of visionary entrepreneurship, was now being blamed for dragging one of the world's most valuable companies into the storm. And while Tesla may yet recover, the damage has already been done. To its reputation, its market position, and its relationship with investors. Since the beginning of the year, Tesla's market capitalization has taken a massive hit, and it's becoming clear the company may never return to the heights it once enjoyed. One of the main reasons was the surge in production costs. Thanks to new tariffs introduced by Donald Trump, the price of essential materials like lithium, cobalt, and nickel shot up. These are critical components in electric vehicle batteries, and as their costs rose, so did Tesla's manufacturing expenses. Margins shrank, profitability dropped, and the company's financial stability began to unravel. But that was just the tip of the iceberg. The tariffs didn't just make things more expensive, they threw Tesla's entire global supply chain into disarray. The company, which once thrived on a complex but efficient international sourcing model, suddenly found itself burdened with soaring costs and delays. As expenses rose and profits disappeared, Tesla edged closer to financial collapse. At the same time, confidence, both inside and outside the company, was plummeting. Elon Musk's attempts to restore investor trust by touting internal reforms and efficiency upgrades only led to more layoffs and internal friction. Tensions were mounting among employees, and signs of internal dysfunction began to surface. For the first time, serious questions were being raised not just about Tesla's financial health, but about its ability to survive as a company. What Tesla was facing wasn't just an external crisis, it was a full-blown internal breakdown. And Musk, despite his relentless optimism, couldn't fix it alone. Neither outside investment nor operational adjustments were enough to stop the downward spiral. Meanwhile, political tensions only worsened the situation. The Trump administration continued to push its America First agenda with aggressive rhetoric. "We've accomplished more in 43 days than most do in 4 years," Trump boasted. He praised sweeping immigration crackdowns, military deployments, and deep spending cuts. It was a message that resonated with some, but alienated many, especially abroad. For Tesla, whose global reputation was once its strength, this alignment with hardline politics was a disaster. The biggest blow came when institutional investors, long Tesla's backbone, began losing faith. By March 2025, major financial players who had once seen Tesla as a critical piece of the future began selling off shares en masse. Industry giants like Goldman Sachs and JP Morgan significantly downgraded their outlooks on Tesla, citing a deeply uncertain future. The stock plunged to its lowest level in 5 years. And while Elon Musk remained the face of the company, his voice was increasingly isolated, drowned out by the noise of market panic, political backlash, and social unrest. Reports of vandalized Tesla dealerships and torched vehicles began surfacing across the US. Protesters scrawled angry messages on cars, accusing owners of being complicit Nazis. In Southern California, angry notes were left on Teslas parked in public, reflecting the growing public outrage. By the time Tesla's market value fell below $250 billion, it was clear the company was in serious trouble. Yet, even in the face of all this, Tesla kept producing cars, and Musk stayed in charge. For him, it was a matter of principle. He wasn't ready to walk away. But with each passing week, his efforts looked more like desperation than determination. Everyone, supporters and critics alike, was asking the same question: can Tesla make a comeback? With its brand now deeply tied to political controversy, a damaged reputation, and eroded trust among investors and consumers, the road to recovery seemed steep and uncertain. Many experts argued that without bold, immediate changes, Tesla might never fully bounce back. Musk would need to repair fractured relationships with European governments, rebuild the brand's image, and restore faith in both the product and leadership. Even if he managed to do all that, it remained unclear how long it would take to reclaim Tesla's former dominance in the EV market, if it was even possible at all. And so, a harsh conclusion began to take shape. The Tesla we once knew might not exist anymore. A perfect storm of political controversy, economic setbacks, social unrest, plummeting market share, and internal turmoil had combined to create a crisis unlike anything Tesla had faced before. The company wasn't just in decline, it was being transformed. And whether it could survive that transformation was now the most important question facing the future of the electric vehicle industry.